Hi, Paley. Can you hear me?
Hello.
Hello. Hello, can you hear me? Yes.
Yeah, I can hear your static, but we can still hear you.
Can you hear us?
Yes, I can. I can, but I think that the sound is a bit broken.
Yeah.
Yeah.
Yeah, that's okay. Let's start. So your name is, sorry, Miss,
Nicole.
sorry,
Nicole?
Nicole. Are you agent? Are you Elaine's sister?
Yeah.
So you are.
Yeah.
Are you twin? Are you twins?
I am what?
Are you twins?
No, not twins.
You're
We
looking
we don't look that similar, but
very
yeah.
same. It's very same.
oh,
Yeah. How are you?
good. How are you?
I'm good, thank you. So yeah, all right. And yeah, let me introduce myself first. I've been a broker for more than 14 years, start from 2007. I've been, I think I work with Paul, Elaine's husband, for nearly 10 years. It's a long time ago, and yeah. So in 14 years, I have a Australian credit license. So I access to more than 30 lenders who can get access to almost every lenders in the market. And yeah, so I do receive an email from you, Nicole, for the rental statements, right? I think for for your lens.
For Elaine.
Yeah, for your lens.
Paul,
yeah. Okay, and Paley, so what's your job? What do you do?
Yeah, so I'm in accounting, so I've done insolvency.
You're accountant.
7 years now.
You're accountant. The connection is not good, I think.
Yeah.
You're accountant, Paley?
Oh, yeah.
Yeah.
Okay. Yeah. I think that. Do you want to change to phone conversation? I think the internet. I think the internet. I think the internet slow or something. I can't hear you.
Maybe
it's difficult.
Maybe we just can do just a call then.
I just call. Yeah, I'll call you.
I think I had a different call.
So
Yeah.
should I call? Should I call you?
What's the link?
Sorry.
I think Nicole's gonna try the Zoom meeting on her mobile phone.
Call the mobile.
Okay, so if I go join, I don't know who it is.
Sorry.
Read the meeting ID. Nicole's trying to join using her mobile phone.
To use mobile phone to use mobile phone for this Zoom meeting.
Just have the microphone and audio, like it might be a bit better. Because I've used it before. Let me try.
Yeah.
All right, John.
Okay, let me connect, Nicole.
Oh, there you go. Any clearer?
Yeah, I think that, yes, I think it's clear.
Recording in progress.
Okay, yeah. What I do, I'll Haley, you sign out from your login, so we can. Yeah, it's better. I think it's better. Clear.
Yeah.
Yeah, that's better.
Oh, that's much better. Yes, that's good.
I use it for like my webinars, so I just thought give it a go.
Yes.
You know, yeah.
Yeah. Sorry because I'm doing renovation at the moment, so my office is gone. So I have to move to the sunroom. You can see this. Sorry
That's all
about
right.
that.
Yeah.
Okay. Now, so Patty, you are accountant.
Yeah, I'm doing accounting work, so full time. So
Are you self-employed or work as a PAYG accountant?
working for a firm.
Working for a firm, PAYG. And how long have you been working for that firm?
For this firm, I think almost 3 years now.
Okay, that's good. Yeah, 3 years. And Nicole, you are running your own business or working for
I work with Elaine and Mum. I don't know if Mum actually called you today. Have you heard a Sing call you today? Maybe not.
No, Sing. Your mom. You mentioned what?
Have you had a call from Sing Lee yet?
Sing Lee, no.
Not yet. Okay, that's all right.
Yeah.
I work with my mom in the real estate and my sister in the integrated, as you know. I do both.
Okay.
Yeah.
Okay, so you work for you work for a family business.
Yeah.
Okay. How long have you been working for them?
Mom, maybe 8 to 10 years, or maybe full time 7 years. Okay, I say, and then like since I graduated 22, 7. Yeah, okay, about 7 years, and then yeah, with Elaine I started a couple years ago.
Elaine?
Yeah, you know, integrated.
Integrated environmental thing. So you are part of this business as well?
Yeah, I help them on like part-time.
She's just an employee for both businesses.
Yeah.
Okay, so you have 2 employees. So you receive regular income from both businesses?
The real estate more regular, and then the integrated is more casual, seasonal.
Okay. Yeah. Okay. Let's use this. I will use your real estate business as the main income at this stage.
Yeah.
Yeah. Okay. Now, what's your current situation?
For us or me individually?
For you as a family.
Yeah. Okay. We're looking to buy like a investment basically.
So do you own your home? Or you rent? Do you own your home or rent at the moment?
Oh.
We're living in our parents' house.
Okay, living parents. Okay, yeah, that's okay. Do you have kids?
No.
Okay, yeah. The parents. So you want to buy an investment property?
Yes. So.
Okay. Yeah. Have you found a property already or?
Not yet.
Not yet. We're trying to figure out how much we can.
Yeah, we're trying to see our borrowing power.
Yeah, yeah. So you want to buy in New South Wales or in somewhere else?
Yeah, here in Sydney, yes.
In Sydney, okay, that's good. Yeah, in New South Wales, okay. And need basically you need a pre-approval. Yes, basically.
Yes.
Yeah. Yeah. Now, what's the price range you're looking at roughly? Any idea?
Well, we don't know how much we can borrow, so it'll be
just say in your mind.
Your mind.
Well, to be honest, we're looking into the hills area, so everything is at least.
At least 1.2, 1.3, at least, right?
At least, yeah. That's a bit. On average, is going like 1.45, 1.4.
Yeah. So your plan is buy investment now and later on you will move into live, or you just purely investment?
Well, it depends. If we can buy into the hills, then you'll invest now and then move in later.
You move later, yeah.
But if we can't hills, then we'll probably buy something else, and it'll be just be an investment. Hills
area, yeah. Because in the hills, district, the house is usually big land, big house. Usually, yeah, it's perfect for the family. Yeah, good. Okay, now, Paley, what's your income?
My salary is 78,000.
78,000, including super or before super?
Before super.
Before super is good. Plus super, that's Paley. And Nicole, how much your mom and dad pay you?
Let's see. I think I put down 55,000.
Okay. Yeah, gross yearly.
$55,000 gross. So you receive regular pay slip, do you?
Yeah.
Yeah, that's good. And also salary goes to your bank account.
Yeah.
Yeah, that's good. Okay, 55. 133,000 combined.
Yeah, and she gets extra from Elaine.
Elaine, yeah.
So, but that salary is like variable.
Yeah, like a casual. Yeah. So, but do you still receive incomes from Elaine on fortnightly or monthly basis, or just
monthly basis? Yeah.
Sorry.
Oh, but like it's the pay slip is done monthly, but then there can be some months. I think the past few months have been okay, but there can be some months that it's quite quiet, like there's not a lot going on.
Yeah, that's business.
Yeah.
It's naturally business. Yeah. And how long have you been working for Elaine and Paul?
I'd say about at least a year.
It's a year.
Yeah. Solidly
integrated.
It's been a couple of years, but
okay. All right. Because you work for your family, either for your mom and dad or for your land, it is possible the bank wants to see your tax return. It is possible. So for Paley, we probably just need your pay slip. You work for third-party business firm. That's okay. But we still need for Nicole, we still need your pay slips, and the bank may want to see your tax return to back up. So that's the situation. So how much you are paid from Elaine and Paul, Nicole?
Say about, I suppose you can pencil down to about maybe 2,000 now gross,
2,000 a month.
If we're 1,000, and then I'll send those pay slips to support pay slips tax.
Pay slip, yeah. Okay, I'll say 1,000 or 2,000 per month. You mean 2 months per month or?
Yeah, per month.
Per month, yeah. Cool. Do you have any other debt? Do you have a HEX debt, Paley?
I have a HEX debt.
You have?
Yeah.
Okay. How much do you still pay HEX?
The total balance outstanding is 24,000.
24,000. Is it deducted from your pay every pay slip?
Yeah.
Roughly how much you pay? Do you remember? There's a couple hundred.
It's not a lot actually. I have to go find my pay slips and find out.
Okay. Yeah. All right.
I'm pretty sure it's less than 100
per fortnight.
Per week.
Per week. Okay. I would say about 300. I'll guess about 300 months. Yeah, I just guess. But they will get a better idea with your pay slip. Do you have any other debt, car loans?
No, the only other debt I have is a credit card that has $800 limits.
How much?
$800 limit.
800 limit, yeah.
And that's it. We don't have any other loan. We don't have any. Well, you have mortgages. We'll get to you in a sec. And then I have a mortgage.
You have a mortgage?
Yes. So the mortgage right now is about 680, I think.
1,000?
Yeah.
So that's under, Paley is under your name?
Yes.
Okay. So the property for this mortgage is for investment, I suppose.
It's for my home in Bexley. So my parents live there. So I live in there. They live in my house.
You're living in their house, and you
Yeah.
and your mom lives in your house. Okay. 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 So which bank do you have this mortgage with?
St. George.
St. George, yeah. So 680,000. And do you know the interest rate?
622,000.
600
And 22.
and 22,000. So
Yeah.
so it's not 680,000, 622,000.
Yes.
And do you know the interest rate?
Yeah, 3.24%.
3.24%. Wow, it's very high. So all right. So your mom, so your parents
Mhm.
lives in there. Yeah.
Yeah.
Lives in, and you lives in your parents' place. Okay, got it. Okay, and Nicole, do you have a mortgage?
Yeah. Total 187,500,000.
Give me a
One
second.
over 187,000.
So 187,
88,000.
88,000. Okay,
188.
yeah. So Nicole, and it's also for investment now.
Yeah.
Yeah, and how much? Which bank are you? Do you have this mortgage with?
The loans are with Choiceland, which I think is NAB based.
Choiceland.
Yeah.
Ah, Choiceland. Yes. Yeah. It's a NAB's aggregator.
Yeah.
Choiceland. Yeah. Yeah. And so you owe $188,000 now.
Yeah.
Yeah. And what's the rate?
Rate is trying to find it. Rate is 3.7.
3.7. For, is it fixed or variable?
This is 5-year variable interest only, and then P&I. And it expires 19th June. It becomes a P&I loan in
No, but it's the interest rate variable or fixed.
variable.
Yeah, variable.
Variable interest only for 5 years.
Yeah,
I think. Yeah.
23 June.
Yeah. When to when?
June 2023.
June 2023. And Paley, your loan is fixed or variable? Or I suppose
Variable.
interest only as well?
No, principal and interest.
Principal plus interest. Variable. Okay. Okay, this is variable. Those are variable. Okay. Choiceland. Okay. Now, how much is your property worth, Paley? The property in Bexley?
2 million.
2 million.
Mm.
Bexley, 2 million. It's a house, right?
Yeah.
Okay. And Nicole, how much is your property worth?
300, 400, and it's 3 units. See, so I go by about like 300, 400, 500. So 1.2.
Oh, 3 unit.
Yeah.
In one title.
No, there are three separate properties.
3 separate.
Okay.
So 188 is overall total loan.
Yeah, like
okay.
remaining. Yeah, yeah.
Remaining is good, or 3 units. So it's about how much it was? About 1.5.
I think that's optimistic.
Probably about 1.1.
1.2. Yeah.
1.2. Yeah, good. Okay. So you combine. You have a lot of equity. Lot of equity. Oh, the rental. How much rental do you get, Nicole?
Yeah, I get altogether. What's my calculator?
It's about 1,030.
Yeah. Let's do 2. Wait. 280 plus 330 plus 420. Oh yeah, 1030. $1,030
Per week.
$1,030 per week. Okay, good. Okay, so we can use this in rental as income as well, and we can have different ways to massage your current, not necessarily massage, probably the wrong term, just structure.
Yes.
Present your current situation. Present. It's better. Okay. I got it. Okay, that's not it's probably I have almost everything I need on the high level. So Nicole, you don't have a credit card?
No.
Okay. Yeah. And all right. And any questions for me?
Did you want to ask? Oh, he didn't ask for rental for Bexley. That's all right. Just for equity. Yeah.
No questions at this stage.
Okay. All right. Do you have any preference of lenders? Any bank, as long as you can get a good deal?
Yeah.
Preferably
Oh, you want offset? He prefers offset.
Offset.
He
Okay.
likes offsets.
I like offsets. I heard you like offsets too, so we're the same.
Yeah, offset. But with your loan, Paley, you have offset with St. George, do you?
Yes, I do.
And Nicole, you don't have offset with Choice Land.
No.
Yeah.
But it's redraw, but it's not offset.
No offset, yes. Yeah. Offset. Yes, tick. Of course. Especially for investment, offset is handy because it is more. It's easier for you to take advantage of tax benefit depreciation later on, especially. Okay, offset. You don't have any particular choice preference for the lender. That's fine. That's good. All right. Do you mind if you email me some pay slips and pay 1 or 2 pay slips, Paley?
Yeah.
And also pay slips, 1 or 2 pay slips from Nicole as well, from your agency as well as integrated as well. So let me have a look how much we can use for your income. Okay, what I do once I got this information, I'll do some research, structure your, because you are, especially for Paley's situation, you have a property living with parents, and your parent property is about 2 million. Potentially, your property can generate a lot of rental. 2 million property, I suppose you can at least rent it for 1,200 a week. Yeah, potentially. So on paper, at least. So probably we can what do you say, present a potential rental income from that property if your parents not living there. Do you know what I mean?
Yeah, I do know what you mean.
Yeah. So this potentially. So it really depends on how much you can borrow. So if you can save a property by, how much saving do you have when you buy a property? How do you want to inject any
you didn't talk about
cash?
Oh, so my offset account, there's 610,000 in there. 610,000
offset.
Yeah.
So basically, your loan is pretty much offset, right?
Yeah. And
so outstanding loan is 622. Offset amount is 610.
Yes.
So basically, there's no mortgage.
Basically.
No balance.
Yes.
That's good. Okay, that's good. So are you willing to use some money in the offset to buy a property?
Top
Right?
of that, I also have 340,000 in cash.
Cash as well.
Well, yeah, it's in the bank. It's in a savings account.
Yes, saving account. Yes, 340,000.
And 40,000.
40,000. Okay. So, all right. So if, for example, if you buy a property for 1.4 million, for example, and say if we can say the bank can lend you 800,000, just hypothetically, so you're willing to contribute 600,000 to the property, or you want to. So there are two ways. The ideal lending situation is bank lend you 80%, you contribute 20% as deposit.
Mm-hmm.
Yeah, so because you just maximize your borrowing up to 80%, and you don't need to pay lender's mortgage insurance. That's the ideal lending ratio. However, but it also depends how much you want to buy, how much the property you want to buy, right, and how much the bank can lend you as well. So that's what I do. I will work on. You want to buy a property for 1.4, 1.5 in Hills area, and rental income in that area probably are looking at about $800 to $900 per week, and work on these parameters, and then work out roughly the bank, how much bank can lend you, and then we'll say if you buy the property at this price range, and the bank can lend you so much, and then that's how much savings deposit you need to contribute. Yeah, so let's work on this way, and then you can adjust. Okay, how much you want to buy, and how much deposit I want to use. Okay, new property. The new property price about 1.5 mil, rent, I would say 900 per week. Let's start with conservative basis, and we'll see how much you can borrow.
Okay. Well, ideally, I would like to get a figure that, well, a conservative figure would be something that won't consider the Bexley rental, the potential rent, and probably I think the rental in Balkan Hills would be 100 a week.
How much? Balkan?
I think is the average rental for let's say in Balkan Hills is where we're looking at.
Yeah.
Yeah.
But I think he's saying for on paper 800, 900, and then the credit provider will bounce back their valuation of the rent appraisal anyway.
Okay.
Yeah. How much do you think? How
Haley
much?
likes conservative.
Sorry.
So Haley likes to be safe, conservative.
Yes, of course. Yeah, I like conservative as well.
Yeah.
Because the reason is you want to work on conservative basis. So the bank likes conservative. Banks are conservative. If you are too when I plug in rosy numbers, the bank won't like it. So if we are working on conservative basis, and it's more likely the bank can lend this amount to us. You don't want to do over the top. And so Paley, how much do you think the rental realistically will be in the Broken Hill area?
About 700 a week.
700 a week. Okay, that's good. Okay, I'll do 700 to 800. Mm-hmm. Yeah. And for Bexley, how much rental you think you can get?
I think my parents will be staying there for a while, so I don't think that.
You don't think you want to consider that? Okay, that's fine. Let's ignore that Bexley income, and just to focus on basically you have two sources of rentals. One is from Nicole's property, $1,030 per week. And the second rental will be around $700 for the new property to buy. Mm-hmm. Yeah. Okay. Yeah, that's good. Okay. Now based on that, yeah. That's
And
good.
would it be possible to have like, if we have, because we have like 4 different loans, where they can have like one loan for all of the properties, or is it like an additional loan?
So you want to have one loan? What do you mean? You want to join Bexley property loan with this one together, or what?
Yes, yeah, join all of the loans together,
All loan together?
if that's possible.
Okay, it is possible. It is possible. But if we do this, probably we can. First thing, definitely you can reduce the interest rate, especially for your St. George loan. 3.24 is very high. Principal plus interest variable rate is very high.
Okay.
Yeah, and but for you probably it doesn't matter too much because your net balance is about $10,000. Yes, yeah. So it's the impact, the real impact is very small. But even though the rate sounds high, and the Nicole's loan 3.7 is relatively on high side as well, even though it's interest only. Yeah, we can. Now, if we combine this loan into one lender, it will improve your borrowing capacity. Yeah, because the bank doesn't, the bank doesn't like the loan with other banks because they don't know their rate, and they don't have control. So they will assess on the higher repayment for the loans with other banks. But if they have all the loans with themselves, they will reduce the interest rate for calculation purpose. Yeah, that's okay. I'll take this into consideration as well. So this and St. George and the Choice Land, and yeah, I'll do that. Okay, got it.
I think it would be some banks are offering like a cash bonus for refinancing, that kind of stuff.
Yes, that's another benefit. Is because you involve refinance. You have two lenders refinance, St. George and Choice Land. So you can definitely, there are still cashback bonus still available. Yeah.
Okay.
Yes. Yeah. That's good. Yeah, that's not an issue. Now, for the new loan, do you have any preference? But at the moment, all your loans are variable rate, and one on interest only, one on principal plus interest. For the new loan, because all the loans are investment, right? Even for Bexley, you can consider as an investment as well. So for the new loan, do you have any preference on variable rate or fixed rate, principal plus interest or interest only? Any source?
I think we.
I don't have preference personally.
But not at the moment.
Okay.
I think if I have a preference, I'll probably stay with. It'll be variable.
Variable, yeah. You prefer variable?
Oh, I think Elaine or Paley, someone mentioned maybe P&I is better because what you're paying is paying the principal in time and not just interest, and then it spikes after the interest only period.
Yeah. I prefer. I'll still recommend principal plus interest, even for investment. Yeah, because interest only have three disadvantage to borrower. First one, you don't pay principal. So you keep paying the interest to the bank, and the principal doesn't decrease. The interest amount doesn't decrease. So you keep paying the interest to the bank for the first one. Second one is the interest rate is higher. The interest rate on interest only loan is always higher than principal plus interest, no matter whether it's a variable rate or fixed rate. Same loan, as long as it's interest only, the rate is higher. And thirdly, it is you will borrow less money. You borrow less with interest only. So because you if you say you in Nicole's loan, 5-year interest only, your long term is 30-year term paid off, but first 5 years is interest only, means you only have 25 years left to pay off your remaining loan, right? So the nominal repayment is higher. So you will borrow less if you have a principal plus interest from the beginning. So you have a true 30-year term. So that's 3 main issue with interest only, and also banks. The bank charge higher rate on interest only basically means the bank doesn't like interest only. Now maybe banks likes, but the government doesn't like interest only. Yes. So they would say, the government discourages people getting interest only with higher rate. Yeah. And what I do, first of all, I'll pick the lender who can lend you the most. I think that's critical. Because you have a lot of savings, Paley. You have a lot of savings to play with, which is good. However, especially for investment purpose, and you have offset account, the strategy, the right strategy is to borrow as much as you can, and put the money into offset account. You will pay interest. You will pay as little as interest possible, but you have a high credit loan limit, but lower loan balance. Mm-hmm. Yeah, so that will be the best strategy, especially for investment. So which means you can have more cash in your hand. You can invest more. Mm. You don't want to, stuck your cash in one property. Mm-hmm. Yeah, so I will find the lender, a couple lenders who can lend you more, and then we choose from. Then we decide. Then we compare the different interests, different loan product, like variable rate, fixed rate. Then we compare which one is the most beneficial, and also we take consideration of their cashback bonus as well. Okay. Yeah. At the moment now, the interest rate of fixed rate loan are lower than variable rate. For home loan, the lowest fixed rate is 1.84%. The variable rate is about 2.3%. Yeah. So if possible, we can have a different setup. We can fix a portion of a loan and leave some portion of the variable with offset account, something like that. But we'll discuss the loan structure in later stage. Mm-hmm. Yeah. Okay. Yeah. Yeah. Okay. Yeah. So new loan will be 30-year as well, right? You want to have a 30-year term. So you have you can have the minimum repayment, and you can still pay off as much as you can, especially with offset account. Cool. Okay, that's pretty much all I need. Yeah. Yeah. Any questions?
Is it better to keep the 20? Like Paley's got about 350. 340 in cash. Is it better to have it in cash or like reduce my loan to pretty much similar, like reduce the loan?
The best way is to have borrow as much as possible, so allows you to keep the cash. Yeah. For example,
leave it as cash. Yeah.
Keep your cash, but keep the cash in the offset account.
Oh, okay.
Do you know what I mean? Just exactly what you do with your Bexley property and Paley.
But his offset is almost paying off the loan already.
Yeah. So for example, imagine Paley, If you have another loan for $300,000 with St. George, your loan is not 622,000, rather 922,000, right? And you put this $340,000 into the offset account. Yeah. So basically, how much you owe to the bank, still nothing.
Yeah.
How much interest you pay, nothing, because you almost offset all the loans, right?
Yeah.
But it gives you, for example, in your situation, you have a 340,000, and if you want to say, if you for this new property, and you have two choices. For example, you can either borrow, say, 700,000, but you need to put $300,000 as a deposit. So if I buy a property for 1 million, and the bank can lend you 700,000 or 1 million. Two situations. They can lend you up to 1 million, but you have choice because you have $300,000 in cash, right? But bank can lend me 1 million. So you have two choices. One, I just need 700,000 because I don't want 1 million. I just use 300,000 as a deposit to buy this property as a deposit, right? So, or you can borrow 1 million. You can borrow 1 million, and I have $300,000. Split 300,000, and then for this 1 million loan, I have offset account. Yeah. So you borrow 1 million, but after settled, you put $300,000 into offset account. Yeah. So when you're talking about the net balance, how much you actually owe to the bank, 700,000, because 1 million minus $300,000 in offset account. How much interest you pay it is over 700,000 because your loan is offset by 300,000. So the net effect is the same as if you just borrow 700,000, right?
But the way
if the difference is in the first situation, you don't have $300,000 anymore. It is in your property. It is paid out. It is you paid $300,000 as a deposit. You don't have $300,000 anymore. But in the second situation, your net balance is 700,000, but you still have access to that $300,000 in offset account. If you need, you can still use it. If you don't need, just leave it. You still owe bank 700,000. But if in case you need it, you have the way to get this money, right? So that's why we always recommend to borrow as much as you can, and if you have some extra cash, just put extra cash, either put into a loan as a redraw, or put this cash into offset account.
Okay.
Yeah. So that's but we can when we establish how much you can borrow, then we can discuss how we structure the loan. So this offset account is a very important component in the loan. It's not just something extra. It's a part of the loan. It's very important offset account. Yeah. Okay. Basically, this. Got it. Yeah. Any questions?
No, I don't have any questions.
Nicole?
No, I think that was my main one. No, because we were just, I was just thinking because I know if we put the cash into my loan, it will reduce the interest. That's what I saw immediately. But I didn't think like what you said is two ways, same net effect, but it's better to borrow more and have the flexibility of the 300 in offset.
Yeah.
Because Paley was looking to do the option one, which is borrow 700. He has 300 cash, and he can put it straight away because
to property.
Yeah, in Hills, most of the buyers is auction, so they want 20% upfront plus stamp duty.
10%
Yeah.
upfront.
Yeah.
Mhm.
So he was thinking to hold on to it as cash, that if we go to auction, we can just put it down like in bank check, like straight away.
Yeah, but
Yeah,
even you put the bank check to the agent on auction, it depends how much you borrow. So in some cases, people borrowing 100%. They borrow everything from the property price plus stamp duty, borrow everything. They, at the same time, they hold on their cash. They borrow 100%. You can still do. And that because you have a lot of equity between you, 2 million in Bexley, say 1.2 million in your units. You only owe 188. So actually you have about 1 million net equity in that property as well, right, Nicole? And Paley, you have over about 1.4 million equity. Even we're not talking about your $600,000 in your offset account. You have a lot of equity, right? So, and also you have a large sum of cash as well. So you should be able to, over time, probably this time you just buy one property as investment, but over time you can build up the second and third investment property as well. So it is a good idea to hold on your cash, so you can pay deposit. You don't need to borrow money. So you hold on $300,000. So you can potentially use the $340,000 to buy an overall property about $3 million. Because every time you go auction, you need to pay 10%, right? 10%. So you can hold on this cash to pay the 10%, and you use equity of in your other two properties to borrow money, right? And because you have a cash, you are in a very, very strong position, cash wise and equity wise. You have very, very strong position. Yeah, very, very good. Well done, Paley. You're young. You're young. You're doing very, very well. You're doing very, very well. Wow, even better than better than me, Paley. Well done. Well done. Cool. All right. Okay. You have my email address, Paley. Email me some pay slips, and also Nicole pay slips. If you when do you plan to do your tax return, Nicole?
Paley's doing my tax return.
It'll be a while.
Oh, that's a Paley. That's your job.
We can give you last year's notice of assessment. Yeah.
Not. We need to pay tax returns. Tax return. If but do you do paper tax return or computer tax return? Computer is good. Okay. And yeah, we can just give me 2020 tax returns for Nicole. Yeah, tax returns, not just notice of assessment. Tax return, about couple pages.
All right. Is there any reason why they need the full tax return and not just the notice of assessment?
Yeah, because Nicole works for family.
Oh, okay.
Yeah, we don't need your tax return, but just Nicole, because they treat for working for family is a quasi self-employed. Because we know family, if you work for family, the family member may write whatever pay slip, high, to bump up the pay, not necessarily real pay. But if you claim in tax return, they can establish this whatever figure shown on pay slip is the real one.
Okay, but although we still provide the bank statements and pay slips, so they should be able.
Yeah, but they still want to see. But that's not all the bank, but some bank.
Okay.
Yeah. Because funny enough, they can find out. They can find out you work for family or not. They can. It's very probably like a credit report, or they can cross because at the moment the banks are very powerful. Their system is very, very good.
Okay.
Yeah.
So how about you just email me a list of things that you want from us, and then we'll provide you with. Yeah.
I'll email you a list of supporting document. Not a full supporting document. I just need some document I can format, especially a payslip. I can do a preliminary assessment on your borrowing capacity.
Okay.
Yeah. Okay. Good. Yeah. Okay. That's all. Any questions, Nicole?
No.
No.
No,
okay.
For us, thanks.
Okay, great. No, that's okay. No, not a problem at all. No problem at all. I'll send you tomorrow. I'll send an email to you tomorrow, Patty.
Okay. All right, then. I'll wait for you to go from there.
Okay. Yeah. All right.
All right.
Okay.
Thanks.
Okay. So bye. Bye.